Well, good evening, moneymakers. This is Joel. We are looking at the chart after a great run-up today on the 14th. This is for October 15th. The point of control is 1089 on the high side of our move today, which this was our extreme high in the trading room today. The extreme high we're looking at for tomorrow and into this week is a 111.25. We will have a top consolidation range if we blow through here at 119.25. This is to the top side. Considering earnings and how Goldman Sachs has been doing, I bet you tomorrow we kick off with a little bit of a rally. Of course, they're going to announce their earnings before the market opens. So at 8:30 in the morning, 5:30 for you lucky souls on the West Coast, they will make their announcements. We'll get a pre-market rally, probably, and I expect to see 1,111.25 with a consolidation range between 1,119.25 down to 111.25. So that's just an area looking at. We're going to bounce around. We also have at, of course, the psychological 1100, which is going to be the Dow 10,000, which has been broken. Basically, it's no big deal. The only big deal it is that the pundits basically are throwing out their little pom-poms and doing a dance around the ticker so that investors feel like it's finally safe to get in the marketplace. That's why I'm looking for tomorrow a higher volume rally, probably going into 2 days and then a turnaround. If we end with a low volume rally into the weekend, I would not be surprised to see this turn pretty hard. Let's take a look at another chart real quick. We're going to take a look at the daily chart. The daily chart I have here, we're looking at also, these moves up, if you understand price agreement, basically showing that buyers are in control. Now, whether or not it's the invisible hand or the government or just Goldman Sachs doing a lot of this buying, is a different matter. But as we all know, trend is your, that's right, friend. So sticking with the trend. Getting in at the top of a trend, though, is not an advisable position. As you can see, the momentum is increasing. We are getting a sharper angle of price agreement here. Now, normally these are short-lived with a price volume. We call it a volume spike coming into the market, pushing up on the last buying spree of investors. Looks to me, news is good. Investors are in. So be very careful in this area. I will show you the weekly chart quickly here. Weekly chart is showing this congestion zone, looking at the 200 EMA, which is the institutional, coming in at about 1173, with basically support coming in here at around 1088. So we're going to be seeing that at this point we could see a push up into the 1121 area, which will be the 50% retracement on the total move down to 666. You know what the conspiracy theorists say. So anyway, watch yourself out there. Quick review to the downside. We're looking at a move that could go to the support at 1072.50. That is the extreme low I'm looking for. If we break through there, our next extreme low is at 1058.50. We're going to run into some support at 1080. Watch yourself in those areas. This is Joel from the moneymakeredge.com/blog. Join us. We will be in Toronto second weekend in December. A little bit cold, but join us.